Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Monday market webcast. Okay. Daily chart, and you can see we just continue to just climb this wall of dragging shorts behind the bus every day and figuring out a way to make another all-time high. You got the 9-day coming in, effectively, 41.24, 41.25. The new weekly pivot is around 41.52. It hasn't had any interaction with the 9-day since we were talking about this consolidation area, well, a little before it, back on March the 26th. Hasn't had any interaction. Let's go over to the hourly chart. It has not interacted with weekly pivot 1 week, 2 weeks, since it interacted with it 3 weeks. So back on March 26th. So you really haven't had any tests of any type of downside support area that could convert in favor of the bears to have them, turn this around and do a little bit of a deeper pullback. What I will say is, ultimately, just like all things, it's not sustainable. Eventually, price is going to catch up. That weekly pivot's awfully tight, tighter than it was where it opened up the last couple of weeks on Sunday. You can see how tight the bands are here on the hourly. So a little consolidation overnight. And here's your weekly. Here's your 9-day. So the moral of the story is, unless these lines get taken out by the bears on a closing basis, and they maintain those lines for an entire Globex subsequent to taking them out on a closing basis, you're going to continue to see these little consolidation zones, little dips that get snapped up, and then more all-time highs. The best thing the bears could do for themselves is, it's okay to consolidate, but when they do these jobs, here and here, they have to follow through. Last week was all about no downside follow through at all. So the weekly pivot is going to be very important this week. The 9-day, as that continues to rise, is going to be very important. Up top, we're dealing with another big round number. We've dealt with 4,000, 4,100, 4,200 would be next. And the way this is trading, there's no reason to think we can't do another round number up there at 4,200. You've got volume weighted average price and our proprietary moving average today both coming in at 68. Hourly midband and daily pivot are both at 41.70. So 68 to 70 is going to be important. They've been ping-ponging around it all night, which is why the bands are as tight as they are. If the bears can break, they can go to 52. They have to do well down there. This can't be another one of these dip and pop, because if on the pop it converts this 70 area, then 83 is under threat. You get another higher high, and it's off to the races. What do the bulls want to do? Get back up above 70. Try to avoid any of this, and just keep doing what you were doing last week. Just bleeding to highs, bleeding to highs, bleeding to highs. Boring, but effective. All right. Everybody have a fantastic day. Be safe, be healthy, take care, trade them well. Come check out the room, and I'll talk to you tomorrow. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.